नमस्कार दोस्तों। जैसे जैसे हम इस वीडियो सीरीज में आगे बढ़ रहे हैं वैसे वैसे हमें पता चल रहा है कि आईएफएससीए इफ्स्का के अंदर कैसे रजिस्टर्ड एंटिटीज वर्क करती है। तो आज की इस वीडियो में हम बात करने वाले हैं कि इफ्स्का की जो केवाईसी गाइडलाइंस है उसमें कैसे नॉर्म्स है जिससे कि रेगुलेटेड एंटिटीज को उन्हें अपने कस्टमर को जानने में आसानी हो। उसके नॉर्म्स दिए गए हैं कि किस बेसिस पे किस कस्टमर का कितना रिस्क असेसमेंट करना है। तो चलिए दोस्तों, इस वीडियो में हम पूरा जानेंगे कि कैसे रिस्क असेसमेंट किया जाता है और केवाईसी में कौन कौन से नॉर्म्स होते हैं जो इफ्स्का द्वारा बताए गए हैं, जिससे कि जिसकी वजह से आप उन्हें इजीली इम्प्लीमेंट कर पाएंगे अपनी रेगुलेटेड एंटिटी में। सो चलिए दोस्तों, शुरू करते हैं। लर्निंग ऑब्जेक्टिव्स। आफ्टर स्टडिंग दिस चैप्टर यू शुड नो अबाउट इफ्स्का केवाईसी गाइडलाइंस and the process to followed by every regulated entity for a client at the time of commencement of account based relationship. IPSCA guidelines for KYC norms. The provisions of the IPSCA AML CFT and KYC guidelines apply to every regulated entity falling under the purview of IPSCA. These provisions also apply to financial groups, a group consisting of parent company coordinating functions over branches, subsidiaries to a specific extent. Chapter 4 of IFSCA guidelines deals with accessing the risk process by prospective client. Risks identified during the business risk assessment must be used to perform the customer risk assessment. The outcome is used to assign a risk rating high, medium, or low, proportionate to ML and TF risks. Accessing customer AML risks. A regulated entity shall undertake a risk-based assessment of every customer, assign the customer a risk rating proportionate to the ML-TF risk. Timing. The customer risk assessment must be completed prior to undertaking customer due diligence for new customers and whenever the RE feels necessary for existing customers. Assessment criteria. When undertaking this assessment, an RE shall take into consideration the identity of customer and beneficial owner, the purpose and intended nature of business relationship, the nature of customer's business, the ownership control structure and beneficial ownership of customer, the customer's country of origin, resident, nationality, place of incorporation or place of business, the relevant product, service or transaction. For life insurance or similar policies, the beneficial and beneficiary owner of such beneficiary. Note: the risk categorization and specific reasons for it must be kept strictly confidential and not relevant to a customer to avoid tipping off. Revealed factors that may indicate high MLTF risks. Customer risk factor. Customers from high risk businesses, activities, sectors, unusually complex or opaque ownership structures, business relations conducted under unusual circumstances, unexplained geographic distance, companies utilizing nominee shareholders or bearer shares, legal persons arrangements acting as personal asset holding vehicles, country or geographic risk factors, countries identified by FATF or credible bodies as having high corruption, organized crime, or inadequate AML CFT measures, countries funding, supporting terrorism, or harboring designated terrorist organization, countries subject to sanctions, embargoes, or similar measures by the UN or India. Product, service, transaction, or delivery channel risk factors. Private banking services, products, services that favor anonymity, non face to face business relationship without adequate safeguards, payment received from unknown or unassociated third parties, services offering nominee, directors, shareholders, or company formatting in another country, Factors that may indicate low MLTF risks. Customer risk factors. Government entities, public bodies, publicly owned enterprise, public companies listed on stock exchange subject to disclosure requirement ensuring transparency of beneficial owner, regulated financial institute incorporated outside India that are subject to FATF consistent AML CFT supervision. Residents established in geographical area of low risk. Product, service or transaction risk factor. Non-life insurance contracts, life insurance products with no investment return, redemption or surrender value, pension policies without an early surrender option that not be used as collateral, pension superannuation schemes where contributions are deducted from wages and interest cannot be assigned. Financial products promoting financial inclusion with defined limited services. When a business relationship should not be established, an RE shall not establish a business relationship with legal person arrangement in following cases. The ownership control arrangements prevent the RE from identifying beneficial owners. Anonymous accounts, fictitious names, or nominees accounts controlled by held for undisclosed person. The customer is self-financial institution, a financial institution with no physical presence. Customer due diligence process. Customer due diligence, a customer or client is a person engaged in financial transactions. Activity with RE includes anyone on whose behalf the act. After assigning a risk rating, the RE must undertake standard CDD measures for all customers, undertake enhanced CDD for high risk customers, undertake simplified CDD for low risk customers. Timing of customer due diligence. CDD must be undertaken at the time of establishing a business relationship. If a RE doubts the veracity adequacy of provisionally obtained data, if a RE suspects MLTF, if there is a change in a customer's risk rating or material circumstances. Establishing business relationship before verification. So, establishing business relationship before verification. An RE may establish a business relationship before completing verification if deferral is essential to not interrupt normal business conduct. An MLTF is low and can be managed. For bank accounts, safeguards prevent transactions closure before verification is complete. Verification is completed as soon as reasonable, practicable, not exceeding 30 business days. Consequences of delay after 30 days. An RE must document the reason for non-compliance, reporting it to the governing body, suspend the relationship, and freeze transactions, expect returning funds to their source. After 120 days, an RE must terminate the business relationship entirely if verification remains incomplete. Customer due diligence requirements. Undertaking CDD, an RE must execute the following measures. Identify the customer and verify identity using reliable independent sources. And identity and verify the beneficial owners to understand ownership control structure. Obtain information on purpose and intended nature of the relationship. Conduct ongoing due diligence and scrutinize transactions to ensure they match the customer's profile and source of funds. So, identification and verification of customer. Natural persons. Obtain and verify full name, unique identification number, passport ID, date of birth, nationality, legal domicile, current residential address, non PO boxes, and contact details using official valid documents. Legal persons arrangements. Obtain and verify name, trading name, tax incorporation number, registered principal address, date, place of incorporation. The RA must verify the legal form, proof of existence, consistence, and the power regulation the entity via MOA, AOA, board resolution. Connected parties identify and screen related parties, obtaining their full names and unique ID numbers. VCIP and digital KYC for Indian nationals. VCIP Video Customer Identification Process, a secure live constant based audio visual interaction by an authorized official to perform CDD. Digital KYC involves obtaining Aadhaar voluntarily or via offline proof of possession or an equivalent e-document PAN and taking a live photograph with watermarking. GPS time stamp identify persons acting on behalf of customer. If a natural person act as on behalf of customer, the RE must identify them, verify their identity and verify their authorization to act. Parameters to verify beneficial owners. Identify the human being behind the corporate वेल्स is mandatory. किसी भी कॉरपोरेट के पीछे ह्यूमन बींग होना मैंडेटरी है. कंपनी नेचुरल पर्सन होल्डिंग ग्रेटर देन 10% ऑफ शेयर्स कैपिटल प्रॉफिट्स और एक्सरसाइज कंट्रोल ओवर मैनेजमेंट. पार्टनरशिप फर्म नेचुरल पर्सन होल्डिंग ग्रेटर देन 10% ऑफ कैपिटल प्रॉफिट और एग्जिस्टिंग कंट्रोल. Unicorporated association natural person holding greater than 15% of property capital profits. Trust includes the author of the trust, the trustee, beneficiaries with greater than 10% interest, and anyone with ultimate effective control. Fallback if no natural person is identified above, the BO is natural person holding the position of senior managing official. Exemptions if the client is an entity listed on a recognized stock exchange in India or notified jurisdiction or subsidiaries of one, it is not necessary to identify individual beneficial owners. Beneficiary of life insurance person policy. For a life or investment related insurance, CDD must be conducted on the beneficiary as soon as they are identified. The RE must determine if the beneficiaries or their BOs are politically exposed person before policy payout. Accounts of politically exposed persons. PEPs are individuals entrusted with prominent public functions by foreign country, head of state, senior politician, military officers each. Enhanced measures. If a customer, BO or insurance beneficiary is PEP, the RE must collect data on the source of wealth, income of family members and close associates. Obtain senior management approval before opening the account or making a payout. Increase the degree of ongoing monitoring. Enhanced due diligence. Applied when MLTF risks are high, measures include obtaining additional customer info, occupation, asset volume, and updating data more regularly. Examine the source of wealth and funds. Recording the purpose behind specific transactions. Requiring senior management approval to commence continue the relationship. Enhance monitoring of transaction patterns. First payment rule. Requiring the first payment to come from an account in customer's name at a regulated bank subject to equivalent FATF AML CFT standards. Simplified customer due diligence applied when ML TF risks are low. Measures include verifying identity after establishing the relationship, reducing the frequency of CDD updates, reducing the degree of ongoing transaction monitoring based on monetary threshold, inferring the purpose of relationship from transactions rather than collecting specific data. Notes: SCDD is strictly prohibited if there is any suspicious MLTF. Ongoing due diligence and sanction screening. Ongoing CDD. REs must consistently monitor business relations, scrutinizing transactions, especially complex, large, or unusual patterns with no economic purpose. To ensure they match the risk profile, customer risk rating must be periodically reviewed. Sanctions screening. REs must continuously screen customers and transactions against the United Nations Security Council sanction list. Failure to conduct or complete CDD. If a RE cannot complete the required CDD, it must not open account or provide a service. Terminate or suspend any existing relationship. Return money's asset to a customer. Consider filing a suspicious transaction report. Exceptions. Applied applications from persons with disabilities cannot be rejected without application of mind. Reason must be recorded. Also, the terminating will tip off the customer. The RE may hold based off FIU India directives. Periodic updation of CDD. REs must adopt a risk-based approach for updating KYC documents. Standard timeline: high risk annually, medium risk once in a 3 years, low risk once in a 5 years. Special timelines: resident Indians with existing financial group in India, high risk once in a 2 year, once in a 8 years, low risk once in a 10 years. Updation process: no change in info individuals. A self declaration via registered mobile email or net banking is sufficient. Change in address individuals. Self declaration via digital channels but verified by positive confirmation within 2 months, plus obtaining a copy of the new OVD. Non natural persons. Self declaration via email, digital channels with board resolution if no change. If there are changes, a completely for fresh CDD process must be undertaken. सो अब हम डिस्कस करते हैं डिफरेंस क्या है इसका AML CFT गाइडलाइंस एंड अदर रेगुलेटर्स के बीच में. फीचर्स बात करें अगर, स्कोप एंड नेचर. टेलर्ड टू यूनिक ग्लोबल क्रॉस बॉर्डर नेचर ऑफ IFSC ऑपरेशंस, इसका में ये है. और इंडियन रेगुलेटर्स में क्या है, टेलर्ड एंड अलाइंड प्राइमरली विथ डोमेस्टिक इंडियन फाइनेंशियल एनवायरनमेंट. देखिए, सेबी, एडा, RBI इन सबको मेनली इंडियन कस्टमर के हिसाब से ही काम करना होता है, तो वो उस हिसाब से डिज़ाइन किए हुए हैं. और इप्सका में मोस्टली ग्लोबल इन्वेस्टमेंट ज़्यादा होता है, तो वो उस हिसाब से किया हुआ है उसका फ्रेमवर्क. रेगुलेटरी फोकस: act as a single unified point of regulation for diverse financial activities within IFSC. इसका एक सिंगल रेगुलेटर है, जबकि इंडिया में स्पेसिफिक इंडिविजुअल सेक्टर के लिए बैंकिंग के लिए अलग है, सिक्योरिटीज़ मार्केट के लिए अलग है, इंश्योरेंस के लिए अलग है, पेंशन के लिए अलग है. स्टैंडर्ड अलाइनमेंट aligns very closely with the recommendation of Financial Action Task Force. IFSCA का ये है. और अदर रेगुलेटर्स का ये है कि मोर हैविली अलाइन विथ स्पेसिफिक इंडियन लॉज, रूल्स एंड लोकलाइज्ड बिजनेस रिक्वायरमेंट्स. क्लाइंट बेस primarily deals with international clients requiring strong global KYC, CDD and international sanctions screening. And other regulators का क्या है, primarily deals with domestic clients. IFSCA में ease of doing business ऐसा है कि aims to provide a world class environment. KYC procedures may be streamlined to differ from domestic entities. और अदर रेगुलेटर्स का क्या है, KYC CDD processes are carved out specifically to suit Indian domestic business operations. The fundamental goal of AML and safety remains shared across all regulators despite operational differences. देखिए, सबका फाइनल तो यही होता है कि जो रेगुलेशन है वो अच्छे से फॉलो होना चाहिए. तो चलिए आगे के चैप्टर में बढ़ते हैं. वीडियो देखने के लिए धन्यवाद.